Hello everyone, welcome to today's video and I am your friend Bharath Shankar. So in today's video, we'll talk about Jio Financial Services Limited and most importantly, why the stock price has been continuously crashing. And of course, right now the entire market is under pressure and Jio Financial Services is no exception. But that's not the only reason behind the stock price decline. Apart from the market sentiment, there are other reasons as well, and as an investor, it's very important for you guys to understand those reasons. So in today's video, we'll cover the key reasons behind the stock price decline, and we'll also try to understand Jio Financial's business model and its future plans and how the company is trying to protect its value. And most importantly, we'll also try to see a detailed valuation perspective as well. So let's get started without wasting any time. So Jio Financial Services got listed on the stock market in August 2023 at a price of around 230 rupees. Since it was spun off from Reliance Industries, there was a lot of excitement in the market considering the potential value unlocking. And many investors believed that Jio Financial Services could be a game changer in the financial sector, just like Jio revolutionized the telecom industry. And maybe that's why in just 8 months of listing, the stock price jumped from 230 rupees to 390 rupees, delivering a massive 70 plus returns for its investors. But then as the initial hype faded, the stock started to fall and slowly it came back to 230 rupees at the same price where it all started. But why did this happen? Despite having strong backing and brand value, why Jio Financial Services stock price continuously started to fall? And there are multiple reasons behind it and we'll break them all in detail. But in order to understand what is going wrong, it is very important for us to understand what is the business model of Jio Financial Services and what exactly does this company do. Let's find it out. So Jio Financial Services Limited is a financial division or arm of Reliance Industries that provides a range of financial services including banking, loans, investments and insurance. It operates as an NBFC, which means non-banking financial company, and offers financial solutions to both individuals and businesses through its various business subsidiaries. So in order to understand it in detail, let's try to understand the various subsidiaries or business divisions of Jio Financial Services. So division number 1 is lending and leasing, where it provides loans and rental services. And this division is called Jio Finance Limited or JFL. And through JFL, individuals and businesses can avail home loan, business loan, MSME loan, loan against mutual fund and loan against property. And as of Q3 2025, Jio Financial's total asset under management or AUM was around 4,199 crores. And apart from lending, Jio Leasing Services Limited or JSSL focuses on a rental model. And through JSSL, businesses and customers can lease IT gadgets, electronic devices and air fiber devices instead of making an upfront purchase. And this business model makes access of new technology more affordable to customers and businesses, at the same time earning rental income to Jio Financial Services. And Jio Financial Services Limited has also entered into ship leasing business and also plans to expand in solar panel and IT equipment leasing in the near future. This means over time Jio Finance will expand its rental offerings, making it easier for businesses and customers to acquire the latest equipments. And then comes division number 2, which is payments, which include digital banking and transactions. And Jio operates its payments business through 2 major platforms. Number 1, Jio Payments Bank, and number 2, Jio Payment Solutions. So Jio Payments Bank function as a digital bank, offering various services like UPI, credit card, debit card, online bill payments and money transfers. Currently, Jio has about 7.4 million users across its digital platforms, and company is also expanding its banking network and has already set up 7,300 plus banking outlets across India. And in the near future, company is targeting to expand it to around 16,000 outlets. And talking about the other platform, which is Jio Payment Solutions Limited, it provides payment gateways and aggregator services for businesses. This allows merchants to accept digital payments more securely and efficiently, making the transaction more smoother. In a way, if you see, Jio Payments Bank is mainly for customers and individuals, and Jio Payment Solutions is mainly for businesses. And then we'll talk about the third business division, which is insurance services. And Jio Financials has entered the insurance sector through Jio Insurance Broking Limited or JIBL, which basically offers life insurance, health insurance, vehicle insurance, home insurance and shop insurance. And currently Jio is working with multiple insurance companies and introducing innovative products like digital auto insurance and two-wheeler insurances. And additionally, it has launched shopkeeper insurance for metro cash and carry, a product specifically designed for small business owners. And all these insurance policies are available on the Jio Finance app, making it easy for users to compare and choose the best plans. And then comes division number 4, which is investment services. So Jio Finance is also expanding into investment and wealth management. So basically Jio BlackRock, a joint venture between BlackRock Inc., aims to offer mutual funds wealth management services. And in October 2024, SEBI approved Jio BlackRock to launch its operations. Additionally, Jio has also invested around 1,33,292 crores across stock market and mutual funds, indicating that company is not just a financial service provider but also an active investor in the market. And whatever financial services all these 4 divisions are providing, they are being integrated into one app which is called Jio Finance app, which is an all-in-one finance platform. And this Jio Finance app is also integrated with My Jio app. This app allows users to manage their digital banking, UPI payments, bill payments, loan, insurance, investments, all at one place. And also the company is continuously adding new features including loan and loan against property, health insurance, term insurance, etc. With these additions, user can handle all their financial needs from one single platform, making financial management easier and more accessible. And as of 2025, if you see the revenue mix, the interest income is about 38% of the total revenue, dividend income is about 21%, fees and commission is about 8%, and the net gain on fair value changes is about 33%. And this revenue distribution shows that Jio Finance isn't just dependent on lending income but also earns significantly through investments, dividends, and fee-based services. So far we understood the business and business model of Jio Finance, and obviously the next question would be, what's next for Jio Finance and what are the future plans? So Jio Finance is actively working on artificial intelligence or AI and machine learning or ML to make banking and financial services smarter and more efficient. These technologies will help the company streamline operations and offer personalized solutions to customers. Additionally, Jio Finance is forming strategic partnership with fintech startups to develop and launch innovative financial products. So now obviously one might ask that what is the ultimate goal of all these activities and future plans? So the ultimate goal is to create a super app, a one-stop platform where users can manage their loans, banking, payments, investments, and insurance seamlessly. And maybe this is the competitive advantage of Jio Finance, which traditional NBFCs or non-banking financial companies in the current market are missing. Because currently if you see, most of the dominating NBFCs in the market rely on traditional marketing channels to acquire new clients and customers, which is heavily cost intensive, where they have to spend huge amount to acquire a customer or a client. And on the other hand, if Jio Finance can automate its marketing based on its massive telecom and retail data by creating artificial intelligence and machine learning marketing models, then this could significantly cut its marketing cost, enabling it to become a game changer in the financial sector, just like it did in telecom sector years back. But now the question arises, despite all these initiatives and the competitive advantages, why its share price is continuously declining or falling? And obviously, observing the current market scenario, you will notice that almost 90 to 95% of the stocks have corrected up to 20% from their peak, and even the Nifty index is down about 14 to 15% from its peak. And this is quite normal in the stock market. In a bull market, almost all the stocks surge, and in a bear market, they decline, regardless how well the company is performing. However, there are specific reasons for the decline in Jio Financial stock. So now let's discuss all these reasons one by one, which are collectively contributing to the decline of Jio Financial's share price. So reason number 1 is decline in Reliance Industries share price. So now you might be wondering, if Reliance Industries stock price falls, why it should affect Jio Financial? So in order to understand this, we need to look at the relationship between Reliance Industries and Jio Financial Services. So Jio Financial Services owns about 6.1% stake in Reliance Industries. This means that 6.1% of Reliance Industries' total market capitalization is held by Jio Financial Services. And currently the market cap of Reliance Industries is approximately about 16,50,000 crores, and therefore 6.1% stake means, which amounts to about 1,650 crores. And on the other hand, Jio Financial's market cap is around 1,48,000 crores. This indicates that nearly 70% of Jio Financial's market cap is directly derived from its 6.1% stake in Reliance Industries. So if Reliance Industries market cap decreases, Jio Financial's market cap will also decrease proportionally. And if you observe Reliance Industries stock price over the last 7 to 8 months, it has corrected approximately 23%. And then we'll talk about reason number 2, which is contributing for the decline of stock price, which is weak Q3 numbers or quarter 3 numbers. So recently the company posted its Q3 results, which didn't meet investors' expectations. The company's asset under management or AUM was about 1,206 crores in Q2, and in Q3 it grew to 4,199 crores. And this significant growth in asset under management shows that or indicates that the company's loan business is expanding aggressively. And obviously, if the loan business is growing and asset under management is aggressively expanding, then investors would obviously expect such kind of a growth in interest income as well. And here is the twist. The interest income isn't showing significant growth. And this mismatch of massive asset under management growth and relatively lower growth in interest income shattered investors' expectations. And this is the second reason for the stock price decline. And then comes reason number 3, which is contributing for the stock price decline, which is lack of growth in numbers. When Jio Financial Services listed in 2023, its revenue for June 2023 quarter was 414 crores and net profit was about 332 crores. Now almost 1.5 years later, the December quarter revenue stands at 438 crores and the net profit is at 295 crores. The numbers clearly show that company's revenue has remained almost same and the net profit has seen a 11% negative growth. In the same period, strong competitors like Bajaj Finance has seen its revenue grow by 45% and net profit by 25%. This is another reason why many investors are currently ignoring this stock. Having said that, however, in my opinion, Jio Financial Services is still in its initial stages and the majority of companies' businesses aren't fully functional yet. Because right now the company is still in the process of entering various products and services, but not everything is fully operational. And this is the major reason why companies' numbers aren't growing. Because right now this company is having this huge plan or vision to create a financial ecosystem. And once this ecosystem becomes fully operational, we might see growth in its profits and numbers. But this to manifest and company's business to become fully operational, it might take time, maybe possibly a few more quarters. And possibly after that, the company's numbers might show growth. So now coming to the valuation perspective of Jio Financials. So Jio Financial Services stock price has already corrected approximately about 40% from its peak price. But however, its P ratio is still above 90. While this is true, but in case of financial companies, the price to book ratio or PB ratio is a more reliable matrix than P ratio to determine whether a stock or a company is undervalued, overvalued or fairly valued. So looking at Jio Financials, currently the stock price is about 234 rupees, but the book value is about 216 rupees. And currently the PB ratio is about 1.03, which is significantly lower compared to its average median PB ratio, which is about 1.5. And also it is significantly lower compared to its peers as well. If you compare it with Bajaj Finance Limited, which is its immediate competitor, its price to book value is about 5.99. So from valuation perspective, the stock is currently trading below its average median and also its industry peers. So in conclusion, Jio Financial Services entered the market with a strong brand name and a diversified portfolio spanning in lending, insurance, payments and investments. However, scaling up and proving profitable is still work in progress. And also the company faces tough competition from established players like Bajaj Finance and fintech startups like Bharat Pay, Phone Pay, Google Pay and MoneyView and many more, which is reflecting in its stock price performance. But having said that, Reliance provided deep pocket backing to the company and also Jio's digital expansion strategy could position Jio Finance as a strong player in the long run. But in the short run, for investors, this stock remains a wait and watch situation. Like it worked in telecom, will Jio's magic work in financial world too? Only time will tell. So that's it for today's case study. And if you like the case study, then hit the like button and subscribe to the channel. And also, if you want a case study on another company, then you can write it down in the comments as well. So thank you so much for watching. I will see you in the next video.